Go ahead and get started. Again, my name is Silas Peters from Seasonal Swing Trader, and I do appreciate everybody tuning in today. I know it's bright and early for some folks. Maybe it's late in the day, maybe such as Serge. He's ready for his 5 o'clock somewhere drink, and it's in the middle of the day for us in South Alabama. But let's go ahead and get started. You are here to see 3-point price action formula to spot market reversals for any market, any time frame. I absolutely love this presentation because it's something that I actually utilize each and every day along with our students and members, and it's very simple. And you know, trading is not easy, but we can simplify the process. So I'm very excited. Feel free to ask all the questions you want during the course of the presentation. I'm probably not going to answer you directly. I want to make sure I teach you the strategy, the meat, so you can actually have an actionable strategy to take into Monday or maybe the Sunday Globex Open, whatever you want to do. And I will get back to all of your questions. Hopefully I can answer all of them. And then I want to take a look at some markets. I want to look at markets, see what I'm teaching you, how these are reacting and what happened on Friday, so on and so forth. So let's go ahead and get started. And we did a sound and audio and visual, so we're good there. Before we start, we must always begin by reading the risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So the Cliff Notes version of this means don't trade with your rent money, your mortgage money, your child's educational funds, milk money, ice cream money, and so forth. You can lose more money than you put into your account. So let me introduce myself once again. My name is Silas Peters. I'm a husband, father, son. These are my two beautiful blonde hair, blue-eyed beauties on the right. They're a little bit taller now, and standing here in front of my alma mater at the University of Alabama. And 3 days after I graduated, I sold my car, packed up my belongings, and I headed north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And I was bitten by the trading bug, and I never really looked back. And while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, other large floor spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office, sales, and support. Also worked as a private family office investment consultant, catering to ultra high net worth individuals. Hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But enough about me, let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. I found this on the internet, thought it was funny at the time because I feel like it's the perception of those on the outside looking in, think that this is what us traders do. We're maybe stuffed in a basement, surrounded by dozens and dozens of monitors with lines and charts and numbers and CNBC in the background. Certainly not the case. Now, my desk did look like this in Chicago for obvious reasons, but I've since pared back to just a handful of monitors. That's all we need, just to check my quotes, to look at my charts, my trading platform, and the internet. All this does is leads to one, eye strain, and it leads to paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm certainly raising my hand. Per Wikipedia, it's the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis and research they thought they could possibly do? They've got their finger on the mouse, get ready to pull the trigger, and then what happens? This line cross this line, or this indicator pops up here or over there, thus negating our decision or bias on the trade. I think we've all pretty much been there, done that, got the t-shirt, and it sucks. It's no fun. And I am hopefully here to help you today eliminate paralysis analysis and simplify your thinking. So I love everybody's interaction so far. Let me know what you trade. I like to see what kind of audience I'm talking to. You trade stocks, options, futures, forex, maybe even cryptocurrency. I trade stocks, options, futures, and FX actively. Do not trade crypto actively. Obviously, you know, we're seeing things heat up. Now we're heating up back to the downside, and I don't trade them actively. I view it more as like a lottery ticket, or I'll wake up, you know, in 10 years and maybe hopefully have a nice little bucket there. But I do trade these markets actively: stocks, options, futures, and FX. So we got options, futures, weekly options, FX, options, and stocks. stocks only, crypto, once did FX. That's great. That's great, because what I'm going to show you today works in all those markets. It's accurate, it's profitable, works in all time frames, and it's 99% mechanical. But most importantly, it is simple. We are not here to teach rocket surgery today. All right, so I do have a promise for you today. We're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. Now, speaking of promises, I'm not going to promise you anything. I can't promise you anything in trading or in life, but these were trade setups that we talked about in multiple free presentations that I did about a potential setup utilizing what I'm going to show you today, about $10,000 setups here in crude oil and RBOB unlead gas. We also had a third one in nat gas, and they triggered and met their $10,000 objective and then some. We also talked about markets in coffee and OJ. You can see it from a 5 and 15-year historical price perspective that the markets tended to bottom out at this particular time of the year. Does that mean that we went and bought coffee and OJ and we bought call options or sold put spreads? No, we said sit on your hands, wait patiently for this very precise setup to occur, and that's exactly what happened. They triggered and they went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about markets in corn, beans, and wheat. This is corn on the left, beans on the right. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out or get quiet at this particular time of the year. And that's exactly what they were doing. We had favorable weather out of the Midwest. Grains were getting quiet, almost being lulled to sleep by the market participants. Does that mean that we went and got long these markets? Absolutely not. We said sit on your hands, wait patiently for the setup that I'm about to teach you to happen. And that's exactly what happened. They went on and met their $4,000, $5,000, $6,000 per contract price objective. Now, who here is ready? Who here is ready to learn the pattern? It's the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or bottom. Now, this is not anything new. Who here is familiar with the 1, 2, 3 top or 1, 2, 3 bottom? Who here? I didn't invent it. I would presume that 99% of you are. This is one of the most fundamental technical patterns in the textbooks, and we're talking technical analysis 101, but it's highly, and I mean highly, overlooked by the majority of traders. So let's talk about it, even if you are familiar with it. Let's talk about the setup. It's price action based. It's a pattern that is comprised of a low, a higher high, higher low, and a break of the higher high in the instance that we're going long, or inverse if short. It anticipates a change in trend from up to down on a break below the 2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. Generally speaking, the more bars to complete the pattern, the bigger the move. It usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. I will stress that it works extremely well when the pattern sets up at significant areas of support and resistance in other high probability technical patterns, such as head and shoulders tops, double bottoms, and so forth. So let's talk about the mechanics. Start here with the 1, 2, 3 top. It doesn't matter if this is Pepsi or Walmart or Bitcoin or corn. It doesn't matter what it is. We're learning the basic principles of mechanics. So point 1 here is the highest peak. We find that resistance and then start to move back down. That gives us our number 1 point. Market trades lower and then retraces back up. That gives us our number 2. Once that market starts printing these lower highs and pulls back down, we have our 1, 2, 3. And 1, 2, 3 top traders know that we're looking to get short on breaks or closes below the number 2, and that's what happens, and it trades to the downside. Let's talk about the 1, 2, 3 bottom. Same rules apply, but only in inverse. So point 1 here is when we find that lowest low or find support and trades higher. We get our established number 1. Market trades higher, pulls back, giving us our number 2. Once we stop printing these higher lows and then pull back up, we get our 1, 2, 3. 1, 2, 3 bottom traders know that we're looking to get long on breaks or closes above the number 2. Now, we don't know exactly what happened in this particular example, but that's where we know we would be looking to get long. Now, let's look at some chart examples. This is a daily chart of the Aussie dollar, the 6A or futures. If you don't trade futures, you could look at FXA, the ETF that tracks the Aussie, or you forex traders could look at the Aussie US. So here is a daily chart. Now you notice we have a red number 1 circle. Why? because that's a 52-week high. Now, when we're looking for daily charts, we ideally prefer to see 52-week highs or 52-week lows, but that's not an absolute rule, nothing set in stone. We'll talk about ways later on in the presentation where you can dial that in a little tighter if you want to find more opportunities. But for these example purposes, we're looking for a 52-week high. And that's what we get, and that's why we have a red number one circle. You see the market pulls down, trades back up, giving us our 1, 2, 3. Now you can see that the retracement was a little shallow. We only had 4 or 5 bars here. The market could have come all the way up here as long as it doesn't take out the number one high. So we have a 1, 2, 3. 1, 2, 3 top traders. Again, we know that we're looking to get short on breaks or closes below the number 2. That's exactly what we get. So now you pretty much know 90% of the strategy that I'm going to show you. But what about the other important ingredients of the recipe, like my risk levels, my target, my profit taking? Well, our initial risk is above the number one high, okay? Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So you can see that from here, from the high of the 1 to the low of the 2, measured down from that 2 is about 225 ticks or $2,200 per contract. So you'll notice that immediately we have a 1-to-1 risk reward ratio. It's very important that you let the market begin to materialize in your anticipated direction. But once it does start breaking down, in this example, we can quickly adjust our risk to the next logical area of resistance. And where would that be? Above the number 3 high. So as we start getting this confirmation breaking down, we can move our risk from here to here, immediately cutting our risk by 50, 60, maybe even 70%. This is a 1, 2, 3 top in Walmart, daily chart of Walmart. We have a red number one circle here. Why? Because it's the high, it's the 52-week highs. That gives us our number one starting point. We have a 1, 2, 3. We already know what the other 98% of traders are struggling with. Well, where am I going to get in? Where am I putting my stop? Where am I putting my profit targets? We know that days in advance. With the 1, 2, 3 top, we know we're looking to get in on breaks or closes below the number 2. We know the initial risk is going above the high of the number 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. Let's look at some 1, 2, 3 bottom examples. Now this is a 15-minute chart of the E-mini S&P. Now on an intraday chart, it doesn't make sense to look for 52-week highs or 52-week lows. So on an intraday chart, how do we define what the session low or session high is? I look back to the Globex session. So if you're not familiar with futures and forex, they trade darn near 24/6. Well, that's pretty much the case. Opening up on Sunday afternoons on the Globex, trading into the Asian session, into the European session, into the New York session, shutting down for about an hour at the end of the day, reopening, rinse and repeat through Friday afternoon. So wherever you start your trading day, maybe it's the 3 a.m. European session, maybe it's the 9:30 Eastern New York cash open, maybe it's the last hour of the day. You're looking for new highs or new lows from wherever you start on the chart. So that's what we get here, new low, new session low. We get a 1, 2, 3. Now there's a couple different entry methods that we can utilize. Aggressive traders may work a buy stop, a tick or two above the number 2, and you're triggered into the trade. Another alternative method that actually I prefer is to either wait for a retest of that number 2 breakout or wait for the market to hook back up and above. So here we can see we busted through the number 2, we got a retest, but the market came down, hooked back up, and we were able to get long on that second run up through the number 2. So a couple things are going to happen. If we choose this method, sometimes the market will bust up out of that number 2 and zoom up to profit targets, leaving you at the train station. There's no reason to get your feelings hurt. There's plenty of other markets and opportunities. But what else can happen? Sometimes the market will come up, roll back over, and not come back up again, stopping you out. So this method can help keep you out of potential false breakouts. Now here is a 1, 2, 3 bottom on a weekly chart of Apple. Using these time frames, hell of a way to catch some longer term position type moves. Here we have a 1, 2, 3 bottom, also a double bottom, which is a high probability setup. We get a break above the number 2 here on this large bullish candle, trades sideways for a few weeks, comes back in retest and or hooks back above the number 2. That's our confirmation to get long Apple. How do we trade it? You can buy Apple stock, buy call options, you can buy call debit spreads, you can sell bull put credit spreads if you like to sell options. There's multiple opportunities. You got to figure out what works best for your trading style. Now, let's talk about failed trades. They don't all work. I hate to bust your bubble, but we're all grown-ups here. We know there's no holy grail in trading or life. This is a trade I probably took in my live account. 5-minute chart of the E-mini S&P, 1, 2, 3. If you're aggressive, you're getting short on this initial break of the number 2, or if you wait for that alternative hook method that we just discussed, it comes back up, hooks back down again, you're probably up plus 1 or 2 points. Now, if you exercise any type of money management, you move your stop down from the high of the 1 to the high of the 3, and you're stopped out here. If you didn't do anything, you're stopped out above the number 1 high. But look at what else we get. We get a new opportunity. This high is greater than that high, so we get a new 1, 2, 3. Market breaks down below the number 2, you get the retest, ends up being a profitable trade. Also like to cover what a no trigger or voided trade looks like. It's neither good, bad, nor ugly. It's just, it is what it is. It's a voided trade. And I'll tell you why I like these. So here we have a 1, 2, 3, looking to get long above the number 2, but the market trades lower, breaks down, takes out the number 1 low. We start the count over. 1, 2, 3, looking to get long here. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3. Finally, on that third attempt, it breaks up above the number 2, allowing us to get into the trade. Now, why do I like this? Somebody gets a gold star on their crown if they can tell me why I like when this happens. What is going on right here? So what's going on is we're likely having some type of divergence. So price is making lower lows, lower low, lower low, but we're likely getting higher highs, or i.e. no lower lows on whatever momentum oscillator we may be using. Could be MACD, stochastics, RSI, doesn't matter. You don't have to use that, but it's just another tool that we can help use for confluence, okay? Let's talk about trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or it close below the 2 or B point for a short. Exit strategies. I would say if you're only able to trade one contract, whether it's one stock, share of stock, one option contract, one futures contract, one FX, go for the distance between the 1 and 2, because it's uncanny how more often than not it will go tag that often to a tick and then sometimes reverse. Now, if you have the ability to trade multiple contracts where you can scale in and out, then I would say take a third, half, 2/3 your position off at that distance between the 1 and 2, and then you can use whatever trailing method that works for you on your balance. They come a dime a dozen. You can use trend line analysis, trail it by 2, 3 bars, moving averages, par SAR, and so on, okay? Now, I've showed you that this setup works on any market, whether it's pips and FX, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty, and on any time frame, whether it's a tick chart, hourly, 4-hour, daily, weekly, and so on, and on any trading style. Are you a position trader, scalper, swing trader, tick trader? I'm gonna take a swig of water here. Tell me what your trading style is. I want to see what everybody's trading style is in here. So we got a lot of swing traders, day and swing. Depends, not sure yet. That's awesome. Position, scalper, really good, big selection there. And that's awesome, because I asked that, like, you've got to determine what your bread and butter is. Nobody can try and tell you that, hey, you need to trade on a 5-minute or you need to trade on a daily. You have to determine what works for your situation and how much time you can commit and what your risk and capital and all that is, okay? I found mine, like the 5 and 10 minute on intraday. I also like the hourly and 4-hour for intermediate swing, and then the daily and weekly for position and longer term swing type trades. Now, you've seen the proof. Let's look at some real trade examples, not to say what I just shared with you were fake examples, but let's look at some real trade examples we've utilized in some of our services. So the first market here is crude oil. Everybody's familiar with crude, whether you trade crude futures or USO or other energy stocks, probably one of the most followed markets in the world. So we're taking a look at daily chart of CL, crude futures. I'm going to look at the chart and work myself to the right. You guys and gals can read all this text over here as I talk. So we have a red number one circle here. Why? Because it's a 52-week high. 52-week high, and we have a 1, 2, 3 top. 1, 2, 3. It's a smaller one, but it's a valid one nonetheless. We know when we saw this pattern immediately where our entry was, where our risk was, and where our targets were. Remember, targets are the distance between the high of the 1 measured to the low of the 2 measured down. Once we broke down, got a small retest, we quickly met our $3 or $3,000 per contract price objective. Then we decided to go sideways, range bound mode. I get asked a lot, does it work in sideways or range bound markets? The answer is yes, but I'm looking for new highs or new swing lows. I'm not too interested in trading these range bound 1, 2, 3s, but you certainly can if you want to help yourself. Here's a 1, 2, 3 inside this range, ends up trading to the upside. But here we have a new number one high. Why? This high is greater than that high, so we get a new count. 1, 2, 3. Now let me tell you why I was licking my chops about this setup. Well, one, because of the already high probability nature of the 1, 2, 3 top pattern that we've been discussing. But secondly, we're at a time in the year from a seasonal perspective where crude oil and energy markets in general typically trade to the downside. So we get that. We get a 1, 2, 3. We know the seasonals are favorables. That's what I call the perfect marriage in trading. We also get a nice trend line break. Market breaks down, gives us 3, 4, 5 days of retest here, plenty of time to get into this market, and we get short. That's exactly what we did. How? We sold crude futures, we buy put options, we sell bear call spreads, trade USO, other leverage ETFs. We meet our $4 or $4,000 per contract price objective. You can move your stop to break even and let her rip to the downside. Now, this market ultimately traded down $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. So all we do is we trail the market using whatever trailing stop methods we prefer, or until we get a potential reversal. So we almost get one here. 1, 2, nope. 1, 2, 3. This looks really juicy. 1, 2, 3 bottom. We're at a time of the year now where energy markets typically trade to the upside based on seasonality. And we also have my second favorite pattern, which is this beautiful triangle. But what happens? The market breaks to the downside and it sold off another 10 bucks, another $10,000 per contract. But we do get another flush low here, shaking out those weak longs, finally sets up that bottom. 1, 2, 3, market breaks above the number 2 and trades back to the upside. Now I want you to remember this chart and the subsequent charts, because I'm going to show you something really special here in just a moment. Gold, another favorite market that everybody loves to talk about and speculate on. I get tickled when I hear people, talking heads try, gold's going to go here, gold's going to go there. I don't care. I really don't care. I'm just looking at the charts and let the charts tell me what I should be doing. So here we have a few examples. One, this is actually GLD that tracks gold futures. I like to look at the futures chart first. It's a lot cleaner, a lot more fluid. You're not going to see all the gaps. But regardless, if you want to use ETFs, you can do that too. So here we have 1, 2, 3. Market breaks below, gives you a retest, reaches our $4 profit objective. Here we flip to the long side. 1, 2, 3, double bottom, breaks above the number 2. You get the small retest, reaches our $2 profit objective. Then we go into sideways mode. People say, well, man, you missed this move or you missed that move. Maybe I did, maybe I didn't. If you want to trade these intra range 1, 2, 3s, again, help yourself. I'm only looking for new highs or new lows, but here's a 1, 2, 3, boom. Here's a 1, 2, 3, boom to the downside. Nice trades. But now we start to make new lows. These lows are lower than these lows, so we're starting to get new counts. Here's a 1, 2, 3. Looks good, but you see right down here, this candle, we gap down, takes out that low. So we start the count over again. 1, 2, 3. Market breaks above the number 2. Actually gaps above the number 2, goes gap, gap, comes back and retests. Also gives us a trend line retest, hooks back above. That's our confirmation to get long. We can buy gold futures. We can buy GLD, buy call options, call debit spreads, or sell put spreads for those credit spread traders. All right, let's look at another one. Delta. This is probably becoming redundant by now, but I just want to keep hitting home the fact about how often these set up and how easy they are to identify. 1, 2, 3, gaps up, comes back and retest, booms to the upside. 1, 2, 3. This one gaps down, never comes back and retest. I don't really trade these. I like to see that retest or that hook back, but you could aggressively, buy put options or sell bear call spreads. We get another chance. This high is greater than that high. 1, 2, 3. Market trades, blasts through the number 2 low, gets a small retest here, moves $8 lower, and then finally another long, 1, 2, 3, trades, breaks above the number 2, trades higher, comes back, and ends up going $8 plus. For you forex traders, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a 1, 2, 3, making a multi-session low. Again, those aggressive traders may be looking to get long on the break of the number 2, or it comes back and retests, hooks back above, meets our 70 pip profit objective. Now all we do is we wait for a new potential top. Here we have a 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, nope. Finally get a small 1, 2, 3 here, 1, 2, 3, breaks down, retests, meets a 40 pip profit objective. Now, day traders, does it work on intraday charts? Absolutely. Here's a 5-minute chart of the NASDAQ. Here we have a 1, 2, 3, breaks above or hooks back above, reaches our 13-point profit objective. New session highs, 1, 2, 3, market breaks below the number 2, trades sideways. We have to pop some tums here, finally breaks down, reaches our 20-point profit objective. We get another setup here, probably in the last hour of the day, 1, 2, 3, market breaks above. If you're lucky enough to get long in that retest, you reach your 30-point profit objective in just 2 or 3 bars. So look, if this sounds hairy to you trading the full size mini S&P, mini NASDAQ, they have micros now. Merck came out with micros that are 1/10 of the size for the S&P, NASDAQ, Dow, Russell. It's a great way to trade multiple contracts with less risk, allowing you to scale in and out of positions and or hold positions overnight without losing sleep. So why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. Have I shown you enough proof? This is where I ask you, have I fulfilled my promise up to this point? I'm gonna take another swig of water here. My throat's getting scratchy. Let me know, have I fulfilled my promise? And if I haven't, you at least have to tell me why, because I don't know how to simplify this even further, but I'm happy to try to do so if I can. All right, everybody says, yes, yes, absolutely, good stuff. No no's so far, which is good. I appreciate the positive comments. But wait, there's more. You knew it was coming. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be quite amazing. So do you remember me telling you just a few moments ago to remember the charts? Remember these charts because I'm going to show you something special? Well, look at the same crude chart that we just talked about. This is the exact same crude oil chart we just talked about, but now you're going to see some pretty lines and pretty arrows. You're smart boys and girls, but you probably figured this out already, but let's talk about what these are. The green arrow is your number 1. Your red arrow is your number 2. The blue arrow is your number 3. 1, 2, 3. Okay. Now the lines. Well, let's talk about the chevron, this white chevron or sell signal. That is showing us a visual aid kind of waving at us that we've taken out the number 2 low. So we have a 1, 2, 3. Once that bar takes out that number 2 low, we're going to get that white chevron. Down here, once we take out that number 2 high, we get the white chevron. It's not a buy signal, it's not a sell signal. It's just showing us that, hey, we may get ready for a setup. And if and only if we get that break of that number 2, you're going to get your chevron print, and we're going to get the plot of these 4 lines. Well, what do the 4 lines mean? A blue line can be considered as your entry level. Your red line is your risk. Your lime green line is TP1 or profit level 1. Your dark green line is TP2 or profit level 2. Okay, and remember, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down, and TP2 is simply 2 times the distance of TP1. Now, what about all this in the middle? Why all these green arrows here? It's because it's telling us that we're making new lows, new lows, new lows, and lows, and lows, and lows. Once we stop making lows and pull up, we get a potential 1, 2, 3. But the market takes out the number 1 low. We start the count over. New lows, new lows, new lows. 1, 2, 3. This is that exact same chart that I was telling you. I was about to get really aggressive to go long here, but we never broke above the number 2 high. We broke to the downside, so we never get a chevron. We never get our lines print. And here we finally get that last 1, 2, 3 down here, TP1 and TP2. Here's the GLD example. 1, 2, 3 breaks above the number 2 high, could even be just by a penny, and we get our prints, TP1, TP2. Remember, we're not getting any signals here because we're only looking for new highs or new lows. And here's that last one. You can see very clearly we're trying to find a bottom down here, which we do. Market takes out the number 2 high, so we get our print. You see we're working on 1, 2, 3 top over here. Here's that Delta airline example. There's the long, there's a short, there's a short, there's the long. Here's a 5-minute NASDAQ. 1, 2, 3 top, breaks down below, hugs the breakout or hugs that breakout area for just a moment. Hits TP1, hits TP2, hits TP2 to the tick, which also happened to be a new session low. So we start a new count. 1, 2, 3. Market breaks above the number 2, trades higher, hooks back above, hits TP1, doesn't quite hit TP2, but close enough for government work. Then we trade sideways. New session low. This low is lower than this low. Market just nips its little head there above the number 2 high, giving us a print. Trades lower, back, pulls back up again, hits TP1. Notice that as we're waiting for TP2, we're making new session highs. So that alerts us that we may need to reverse our position and get short. We finally do hit TP2 and we do get that last short. 1, 2, 3, market breaks down, trades up, hooks back down, it's TP1 and TP2. So is this training for you? Only you and you only can answer that. If you're new to the markets and you want to help jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, the paralysis analysis, you just want to simplify your process and add a new strategy. Nothing wrong with that. Or if you want a very step-by-step mechanical plan that you could even do part-time, then this training could be for you. And I'd like to tell a little story here is when I had this built out a few years ago, I brought my wife down to my office, who's a ballet teacher. I brought my 2 girls down to my office who don't know a flying flip about the markets. And I showed them what I was attempting to do, what I was attempting to show you today. And of course, they got sidetracked with all the colors and the candles and the widgets and things like that going on. But after I talked to them, they got it. They understood this concept. So my point is that if they can understand it, then you certainly can too. We may not remember learning how to count to 3 or learning our primary colors, but that's about all you need to know with a dash of common sense. So I do have a very special offer for today's workshop attendees. It's called the 3S Code High-Low Indicator and Scanner. We built it for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. You're also going to get the Chart Pattern Principle PDF Manual and Trading Guide, Chart Pattern Cheat Sheet, 25 Top Option Strategy Guide, and VIP email support. Also going to get access to our private Discord channel, spot weekly high-low scan updates across stocks, futures, and FX. Now, if you don't remember what the 3S code is, let me refresh your memory. This is a daily chart of Crude. Nice, easy, clean setups. Here's a short, there's a long, all with your entry, risk, and target level. Here's a daily chart of Bank of America. Long, 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 and these do not repaint. So what you see is what I see is what you see. Here's a daily chart of Love, Southwest Airlines. There's a short hitting TP1 to the tick. Here's a short. Whoops, this one's a loser. Bad trade. We get another chance to short the market. And remember, you can trade these on trade these with options. I mean, that's primarily what I used to do. So I like to sell credit spreads. So I'm selling bear call spreads for short, selling bull put spreads for longs. Now, why do all the work when you can let technology do the work for you? Here's a screenshot of my Thinkorswim platform where I'm scanning for 1, 2, 3 tops in the Russell 1000. Only stocks that are optionable, $20 a share or greater. I hit the green scan button and voila, I get my results. And I have one monitor dedicated to watch lists where I'm scanning across multiple asset classes, across multiple time frames, all at the same time, and you can do the same. Now, we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. 4-hour chart of Apple. Here's your indicator component. And then here's what it looks like on MT4, 4-hour chart of the Euro Kiwi. Here's a long, here's a short, there's a short, and here's a long. Now, full disclaimer, there is no scanning component on TradingView or MT4. It just does not exist. Now, if you know a Russian programmer that you want to make an introduction to, let me know. I'll be happy to reach out and have it program or have the scanner designed for MT4 TradingView. But right now, you're going to get the indicator for all 5 platforms and the scanner for 3. Now, we know there's no real crystal ball in the market, but I like to view this as one that provides me with a daily process. I'm letting my platform technology scan the markets for me, locating the setup, go to my platform for entry, and manage your trade through the exit. And you can start doing so today with the 3S code. So here's your special offer for the first 25 spots. You're gonna get the 3S code high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. You're also gonna get the chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this on the internet at these prices. No joke, $19.97, $14.97, and $9.97. But for today's live Toasted Trader special for the first 25 people, we're proud to offer this for a one-time fee of $397. That's a one-time fee, seasonalswingtrader.com/code. And I just popped that into the chat for you. This is a one-time fee. You own it for life as well as any upgrades. Now, why do we limit this to 25 people? Because we actually care about our students and our members, and we want to provide highest quality white glove support, okay? And we just open it up to the masses. We can't do that. There's only so much time in a day, so we want to make sure you're taken care of. Now, let's quickly cover what the indicator and scanner includes. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas, as you just saw. You're going to get the entry, exit, stop, target levels, all color coded, the customizable settings. If you don't like red, you want hot magenta. You don't like lime green, you want orange. You can do that. You can adjust those levels, as well as multiple look-back periods. So remember what I was telling you on those daily charts, we were kind of identifying 52-week highs and 52-week lows. If you want more opportunities, you can have it set to plot these, say, every 6 months or every 90 days, whatever it is, however amount of frequency, more or less, that you want. You can scan for setups only or trigger only. Remember, setups are those that are in the process of setting up. Trigger only are those that have actually already triggered. You can scan for tops, bottoms, or both. You can scan for intraday setups or swing setups or both at the same time. You're also going to get my chart pattern principle trading manual and guides, a 90+ page PDF, how to read charts, additional strategies, other high probability chart patterns and seasonal trends. You're also going to get my 25 top option strategy guide, literally strategies for all account sizes, whether you're just learning to trade basic calls and puts to more intermediate advanced, such as condors, diagonals, calendars, butterflies, and more. Lastly, you're going to get access to the private Discord channel. This is not a trade room, but more of a chat room type setting where it's like-minded individuals sharing ideas, me posting charts, posting analysis. You can ask questions, and we can't cover all of the markets going on 24 hours a day. The market's just too big. So It's a place where we can share high probability setups. Now, here is some proof. I don't ask for these testimonials. They come in all the time, very humbled and pleased. But most important, I'm happy to see that people are taking action using the 3S code. Now, here's an example of it from one of our alert services of trades solely using the 3S code. You see the $7,800 on crude, $5,800 on unleaded, $1,800 pound, $1,400 on euro, and then a $3,600 nat gas trade that was closed, I mean, basically in 3 days. And I do eat what I cook. These are by a screenshot of my Thinkorswim platform where I trade equities and equity options, my futures account where I've got crude options, cotton options, copper options, yen options, nat gas options, S&P. And then finally here, I just want to show you one last nice, easy, clean setup here. E-mini S&P chart, 5 minutes, 1, 2, 3, TP1 and TP2. So here is the offer. Once again, it's seasonalswingtrader.com/code. You're going to get the 3S high-low indicator and scanner for Thinkorswim, TradeStation, Ninja 8, TradingView, MT4. Chart pattern principle, PDF manual and guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to the private Discord channel. So now let me take a breath and I'm going to scroll up and look at all of your questions. We're going to look at some charts. So first one I see is, when do you close a trade like this? Well, remember, we're targeting TP1 as our first profit objective. So we're looking to take profits at the distance between the high of the 1 and the low of the 2, or the low of the 1 and the high of the 2, depending on if it's long or short. Where exactly your entry on the chart? The entries at the break of the number 2. Doesn't mean that we're initially just getting in on that first break, but we're looking at an entry around that number 2. I'm gonna look at some charts. We're gonna look at some charts. Simplify further. Can you clarify what questions you have, and I'll be happy to try and do so. Which trading platform does this indicator work? Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Eric, it is. We don't have a PayPal option at this time. I'll have to customize the link. So if you're interested in PayPal, send me an email, support@seasonalswingtrader.com, support@seasonalswingtrader.com, and I'll create you a custom link. I believe TD Bear Trade Swim been acquired by Schwab. Yes, yeah. That's going to be, so I use Thinkorswim, and I don't anticipate that becoming an issue. I'm pretty sure that platform is not going anywhere. And from what I've been told by the institutional desk at Schwab and TD, that's going to take probably another 2 or 3 years before that whole merger thing settles. So I'm not worried about it. What's my view on gold? We'll take a look at it. I want to get long, but it depends. You know, with this method, you can have a view or a bias or opinion from a fundamental perspective, but we're trading with the 3S code. So I do want to show you, if you're like me, I like to kind of see what I'm getting here on the, you know, what you're purchasing. So here's the inside of the members area. Hopefully you can see that. So once you get in, here's all of your resources and bonuses, and here are your Thinkorswim installs. Here in videos and PDF guides, TradeStation, V10, V95, NinjaTrader 8, TradingView, and MT4. Okay, so you're going to get access to so you don't have to email me and tell me what platform to grant you a license to. You're going to get access to all of these. Okay, yes, you can load on multiple computers. Absolutely. This is just a free widget in Thinkorswim. It's not a requirement, but obviously I am seasonal swing trader, so I do like to trade in line with seasonality. Now, if I'm trading off of a tick chart or a 10-minute chart, am I incorporating seasonality? No, but I am certainly on the daily and weekly longer time frames, and I like to trade in line. Sometimes I will, you know, take seasonality out of the equation, just depending on the setup, but I do would prefer, obviously, for those two things to match. Let's take a look at, no, this is not a subscription. You own it for life. It's a one-time fee, seasonalswingtrader.com/code. Speaking of gold, you actually asked that. All right, this is TradingView. Can everybody see the chart? Just want to make sure everybody can see. Sometimes it freezes whenever I pull up a chart. Just somebody give me a confirmation. All right, let me see. I'm not sure what happened there. Okay, so let me show you this little secret. So here's TradingView. I'm going to add the top and bottom. And now, do we see the 1, 2, 3 top or 1, 2, 3 bottom here on gold? This is a daily chart of gold. So right now, what is my opinion? Right now, I think it's just kind of chopping, consolidating, but this is the last setup we had on gold. We want to look at crude. Here's the setup. You see we're working in a potential 1, 2, 3 top. Here's the last setup. 1, 2, 3, 63.30 down to 58.50. What's the math on that? It's like $4, $4,000 a contract. This is not repainting either. Let's go to ES. All right, so ES, and we have very clear rules. Sometimes we'll get wicked down below the number 2. My rule is I want a close below the number 2. So that kept me out of that one. Here was the sell, no trade here. Last one here. This bar actually met TP1 profit objective on the same bar, and it was from 41.70 down to 41.25. If you want to have more opportunities, all you got to do is drill to lower time frames. Look at these setups here. We get no close below the number 2. Here was the last short, and we hit TP1 and we hit TP2, and now we're in a long from 42, 42.27, 42.28, and we closed on Friday at 42.75. Let's go to like an intraday. Let's go to intraday chart. Let's look at the 10-minute. All right, so here was we didn't have any setups on the 10-minute there, at least during the U.S. session on Friday. Let's take a look at other markets I like to follow. Here's the euro currency on a 10-minute. Japanese yen, we had a couple setups there. Crude oil. All right, so there was a short around 74. You probably closed out around break even there before the day. Yeah, I can look at some other markets here. CMG. All right, so there's the last, no setup right now. We won't get any setup until we take out these highs. We'll start getting a 1, 2, 3 top. But you should, Peloton, you should see though now very clearly how you can swing trade these. Whether you're buying the stock, I presume most of your options traders, at least by the little poll we did earlier. Here is Peloton. You know, whether you're just buying calls here or selling bull put spreads. Adobe, let me clear the drawing tools out. There we go. So we're looking for a potential top. FXI on a daily. See Aussie New Zealand. There we go. All right, so there we go. Broke down. We get a lot of retest here. Hits TP1. And remember, I told you that you can adjust these settings here. So here you can change all the colors and things like that. All of these other variables you can change by the end user. Here, if you want to see at least a minimum bars between the 1 and 2 setup, a certain depth level based on percent, or the retracement level based on a percent. All of this is broken down and described in the members area. So if you start, playing with some of these settings, then yes, my setups will differ from maybe yours or Billy or Bobby or Susie, because these are different parameters, right? But these are just basic out of the box, black and white settings. I like to see pretty much all of the setups. I don't get too restrictive because I want to be alerted to a potential setup, and then I'll do my own analysis on whether or not I want to take that trade. Twitter. All right, there's your Twitter. So we haven't had a setup on the daily since early March. But again, if you get a little bit more liberal on your settings, like depending on the frequent, maybe instead of 52-week look back, maybe it's a 6-month look back, and so on and so forth. That will determine whether or not you get a setup. Pound New Zealand. All right, there's your pound New Zealand. And we're getting a 1-2 right now. So once we stop making these lows and we pull up, we'll have a confirmed number 2, and then we'll start to have a 3. So assuming this was the low, you're gonna, that will be basically our entry, 1, 2. Let's say the market retraces up to here. We'll have a 1, 2, 3, and we'll be looking to short right here. Now your target objective is going to be the distance between the high of the 1 measured to the low of the 2 and down. So you can do all this manually. You can, I did this manually for years, but the point is, having the visual, it's price action based. People say, well, you trade with indicators or price action. Yeah, it's price action based. It's all price action based. This is just a tool to help us visualize, so we don't have to sit there and get our calculators out and go, oh, okay, from 203.25 down to this. We automatically see it, and we can go and place our predetermined strategies based on the platform. Bitcoin 5-minute chart. Okay, man, you're living by the seat of your pants. 5-minute chart on Bitcoin. There you go. That's interesting. I've never had that request. But damn, that looks pretty. That looks like pretty good. Maybe I'll start trading 5-minute Bitcoin. It's too dicey for me. The link is seasonalswingtrader.com/code. There it is, seasonalswingtrader.com/code. All right, guys, I think I'm at the end of my tenure here. I'm going to loop it back to Jeanette and the team at TradeThirsty, and we got a great presenter, Mark Helweg, coming up, so make sure you listen to him. Everybody have a great weekend. Stay safe out there in the markets and in your health, and I look forward to seeing everybody on the inside. Take care.